Hey, it's Bill Gross, the LA probate expert with my weekly real estate market update. And right now we can say that the real estate market is continuing as competitive as ever despite soaring costs. And let's take a look at the details. The number one things that should concern all of us was there's really two main factors. There's inventory, which remains steady, and the mortgage rates, which had been shooting up and up and up almost without end. But recently, take a look at the chart, looks like maybe we hit a peak. Now, this chart is just a moment in time based on today's facts, and it could all change. If the Russian war changes, or Ukraine changes, or China changes, or North Korea lobs nukes, or a million things can change the facts. But based on the current facts, it looks as though interest rates, which had run up nonstop starting around September last year, and certainly this year have been a nonstop tear up, have finally paused while the market is still very competitive. We still have multiple offers. We still have more buyers looking for properties than we do have houses. So what does this mean? Well, again, doesn't mean it's a prediction, but it's something to pay attention to, that the mortgage rates for now look like they've peaked. For the longest time, we've heard that one of the driving forces of the market will be increased delinquencies and foreclosures. And I see real estate agents all the time being presented with programs on mastering foreclosures in the REO business. But the reality is that bank delinquencies are at an all-time low. That the run-up of values have helped troubled homeowners either refinance their out of trouble or sell their way out of trouble. And either way, the housing crisis is not continuing. In fact, the rise in rates might cause some sellers not to sell their house because they were going to trade up and borrow, and the payment they were going to pay for has also now gone up. So if anything, it does not appear as though we see a rising number of foreclosures or defaults that will cause a drop in the mortgage rate. And here's a fascinating article by Zillow, where they say the market's competitive as ever. And they go through all these numbers to show how much housing values have jumped up and how much the monthly mortgage payments have jumped up. And they've jumped up about 50% in each of the regions that they monitor. And you can see how the inventory has remained low, though their numbers are a little different than the market I look at. But overall, inventory has remained at record level lows. And after all these numbers, what do they conclude? They conclude that the market going forward, they expect to rise by 11.6%. Now think about that. If you buy a house and you put down 10%, you borrow at 5.5% mortgages, but the whole house goes up at 11.5%, you win big. And as long as those numbers are underlying the market, there'll be more buyers who will buy houses because in the long run, they're borrowing at 5.5%, something that they know will go up in price by 11.6% on average. Now, there's no guarantee of the increase in value, but there certainly is a strong possibility, and that's what it looks like based on the market where we're at today. So, is the market crashing? No. Is the market falling apart? It doesn't even look like it's slowing yet. Maybe it's slowing from the feverish pace of last year. But right now, the housing market is strong. So if you're looking to buy a house, this is a time to buy. Make sure that you can lock in a great rate that you can afford, and make sure that rate will be a 30-year fixed rate so that if down the road rates go down, you can refinance like homeowners have of years past. If you're looking to sell, it's a great time, but let's make sure we get your buyer locked in. Don't allow the buyer to renegotiate the escrow along the way. That's why you need a strong agent. So if I can help you, I'm Bill Gross. Call, text, or email me. I'm here to help you. And as always, make today your best day ever.